There's an anxiety that comes with debt. Only a person in debt knows. The deadlines, the messages, the phone calls, the accumulating interest.
Every so often, you have less money than you need to carry out some activities. So you borrow some money from person X. That amount quite often requires you to make a monthly payment. And because you did not take this debt with one clear plan, you actually get under very, very intense pressure on how to deal with this.
Hello, my name is Barbara. I'm the host of Sema Podcast, The Blueprint. Today we are going to talk about debt consolidation. Our guest today is Mr. Njeru Karana. He is a business consultant. He is also the author of Mind Your Business. I love this book, a book on how to start and run a sustainable and profitable business. So I hope you get this book. He is also the CEO of Meridian Group. This podcast is sponsored by Millennium Work Depot, a co-working space located here at Millennium Business Park along Karen Langata Road. I hope you check them out and have a great time. Mr. Njeru, welcome to Sema Podcast.
Thank you very much.
How have you been?
I've been very well. Yourself?
I have been wonderful since the last time we met.
Excellent.
When we talk about debt consolidation,
Yes.
what exactly does that mean?
I think you need to see it in the context of how individuals and businesses exist. Every so often, you have less money than you need to carry out some activities. So you borrow some money from person X. That amount quite often requires you to make a monthly payment. Then as things move along, you have another need. So you go to another person and you borrow some more money. And that one also has a monthly repayment. So now your monthly repayment, you are paying against two loans. And you continue like that until at one point you find yourself, you have got a credit card debt, you have got a debt from the digital, the mobile phones, you have a debt from your employer, maybe you took a salary advance, you have a debt for your car, you have a debt for maybe a mortgage. So you have got 10, 15 debts, all of which are requiring you to pay a very large monthly payment. And because you did not take these debts with one clear plan, you start now getting under a lot of pressure. You find you are defaulting on some, so people are calling you, they're harassing you sometimes. So you actually get under very, very intense pressure on how to deal with this. So the idea of debt consolidation is why you say, pause. What can I do with all this pressure? Then you look at your income, you say, maybe these debts require you to pay like 150,000 a month. Then I look at your monthly income, you say, I can only afford to pay 50,000 shillings a month. What do I do? So at that point now, you approach a lender, either one of the many that has lent you money, or a completely different lender. And you say to them, why don't you give me one loan? I pay off all these loans, then I am left paying a small installment monthly. So that is the context into which debt consolidations should be seen. It happens for companies, it happens for individuals. Even a country like Kenya, you could find that the country has got so many debts from all over the place. So the country goes and borrows one large debt from one lender, pay off everybody else, and then reduce how much needs to be paid out as repayment.
What are the kind of debts people can consolidate?
Typically, any debt can be any group of debts can be consolidated. You might find, for example, in your business, you borrow a loan for working capital from a lender A, then you borrow another loan for more working capital from lender B, then you borrow again for more working capital from lender C. So those three debts can actually be consolidated to become one debt. If it's an individual, you find your debts are very varied. You have got personal debts like credit cards. You've got debts probably even from the kiosk. You might even have a debt with your shopkeeper.
Yes, Mama Mboga.
Mama Mboga, you might even owe Mama Mboga some money. So all debts that a person has at any one time, when you take the entire stock, then you can start looking for a consolidation plan. It's like having very many things scattered all over your house. Then you pick them all up and you put them in one basket. Then you say, now all my problems are in one place. Let me look for solutions. If you can be able to get a loan, let's say from a bank, and you are given like 2 years to pay or 1 year to pay, you'll find now, you see, a lot of those debts are paid monthly. So how much you have to pay is a lot. So what does a person do? You pay and you borrow again immediately.
Yes.
It's like robbing Peter to pay Paul.
Have you been looking at me? Are you watching me?
See? Yeah. So a lot of people they're in that loop. Yeah, you borrowing money. The moment you pay like this, you apply again. The moment you pay like this, you apply again.
And loaning apps are very clever. The moment you pay, they give you a higher loan. So you're like, by next time, I'll have paid it.
So now you're an even deeper hole.
Yes.
So to get out of that, you must have that courage of saying, you see, a lot of times when the debts are too many, you don't even want to list them down and see. You feel you're even scared of listing them down.
Yes.
You see, so the first part of curing this problem is take a piece of paper and a pen, list all your debts, list the lender, list the amount, list how much you are supposed to pay,
and
when are you meant to be finishing paying all that debt. Then when you look at that now, the solution starts to develop in your mind.
So when does the interest calculation come in all that?
You see what happens that every loan that you are given has got a component now called interest.
Yes.
Now interest is time based. So you'll be told, for example, the bank is giving you a loan at 18% per annum. So that interest occurs against the money that you haven't paid. Now, to make it easier for you, the bank will probably apply a formula which distributes the reducing interest so that your installments are the same throughout the 12 months or 24 months of loan repayment. But I think at the heart of this, as much as we're going to be talking about reducing interest, it's a cash flow thing. Yeah, it's really more important a cash flow thing, that you are able to reduce how much you're being asked to pay. And then that extra money that you save, you can also invest it in something else.
We need to talk after this. Okay. So the same applies to SACCOs.
Yeah, you see, as long as now, there's an important thing that you need to deal with. A lot of the people that lend you money, they ask you for security.
True.
Some of them will have asked you for a loan for your car. Some of them will have asked you for a title deed for your land. Okay, so your securities are scattered all over the place. Okay, now you could find your car is worth $1 million. It is stuck somewhere because of a loan of 100,000. Your land is worth 10 million. It is stuck somewhere because of a loan of 1 million. Now, the consolidator usually will take the securities which are enough for securing the amount that you are borrowing. So you could find out of that process, a few of your own securities actually get freed because they were not required. So you could find, for example, if you've got the piece of land is worth 10 million and all your debts are coming to 3 or 4 million, you are able to free your logbook, your whatever else that you had committed to different places. You see, you've already taken the loans.
Yes.
You're not really getting a new loan. You're just lumping up all your loans together. In fact, one of the things you should discipline yourself is that the moment that you have consolidated your debts, please don't get the temptation to say, now that I'm paying a small installment, why don't I go and take another loan like somewhere else? This is not part of this. You see, now you'll have driven yourself right back into the hole. Yeah, so you need to be disciplined to say, as much as now I've got a cash flow relief, let me focus on paying this debt until I complete. Then once you complete, you can take the debt again.
You've read Psychology of Money. They talk about how people rationalize how they spend money. For example, I'll buy this top because I'm rationalizing that I need clothes. I might have 1 million clothes, but I don't have a top that matches the shoes and the trousers. That makes sense to me. So when you talk about discipline, I feel like it's easier said than done.
I think when you see, you become indisciplined if you have never been in trouble. By the time you are coming to think of debt consolidation, you are really hurting.
True.
So because of not wanting to go back into that difficult situation, it's easier for you to get disciplined than somebody who has never been in a hole.
Let's say a listener has just logged in and they've skipped to this exact minute to watch this video.
Yes.
What are the things they need to consider when choosing a debt consolidator?
In debt consolidation, you are solving several problems.
True.
Problem number one, you are solving the issue of a very big monthly commitment. That is problem number one. Problem number two, you are thinking about the cost that you are paying monthly, because different lenders will charge you different amounts. I have seen cases where a customer whose debt consolidation we have handled is paying 60% interest on one loan and is paying 18% interest on another. So you that's the second problem. We'll deal with each of those specifically. Okay. The third, when these loans were acquired, you paid fees, you paid processing fees, you paid commitment fee, and all the other fees that are charged by financial institutions. Okay. So when you start considering where to seek debt consolidation, okay, those three things guide you. So let's talk about the first one, where the real problem you're trying to solve there is the large amount of money you're paying monthly. So you need to look at lenders who are willing to give you a loan for a much longer period, because the longer the period, the lower the interest rate. Okay. Now, when you talk about the interest rate, you see the amount of money that one lender now will be lending you is substantial compared to what the individual lenders have lent you. So you are able to petition for a lower interest rate. Two, the new lender is acquiring a loan with very little acquisition cost. Because if, for example, it was a piece of land that had been used as security, when they are inheriting that security to lend you, a lot of the basic work of verifying the land, searching, those basic things had been done by the earlier lender. So they don't have as much cost as if they are taking up a new loan. So you can use that to leverage and say, since you're not going to cover all these initial costs, why don't you charge me a lower interest rate? Simultaneously, why don't you charge me a lower processing fee, purely because it's like you're getting ready food, really. You see? So those are the things that you should consider. Then again, you will find lenders exist here in the banking sector, commercial banking, in the banking subsector called microfinance banking, in the SACCO sector, in the non-bank sector, non-bank lending like microfinance institutions. So as much as possible, if you are seeking to consolidate your debts, go towards the bank. Because in the hierarchy of, actually the SACCO probably would be the highest priority, because the SACCO in this country provides the lowest interest rate at 12%, at 1% per month.
Yeah.
If you cannot get a consolidator with a SACCO, and for a SACCO, you need to have been a member of that SACCO, they have their own rules. Come the commercial bank. Commercial bank will probably charge you, in fact, not probably, invariably will charge you a lower interest rate than even the microfinance bank. And then when you go beyond that, now you got non-bank lending institutions. Those ones tend to be more pricey, partly because some of the money they lend, they borrow from banks. So they borrow money from banks and then they lend to customers, meaning that they have to have interest which is over and above what the bank is charging.
Because they also need profits.
Yes. So that's about how you would. Of course, you could probably visit sites which handle debt consolidation, like there's one called www.debtconsolidator.co.ke. So when you go to that website, you'll be exposed. You'll be given a chance to list all your debts and the securities and all the terms and how much you're paying. And then you're also given a chance to indicate how much you are able to pay. So lenders can be able to view your loan, and the ones who are interested can actually pick it up from there.
How does credit score come in?
The concept of a credit score is like a ranking, where by the way you have performed with the loans, you are given like a grade. So that the next person who gets your credit score, they are able to see that you're either a good customer or a poor customer. That idea is not used very much in this market. In the Kenyan market, it's not really used that much for the purpose of lending. Lenders in this market seem to fly directly to security. You know, when you want a loan, the first thing they ask is, what's your security?
Mm.
Yeah.
Mm-hmm.
In fact, sometimes customers come and say, I have a security worth 100 million. How much can you lend me? You see, which is really an incorrect way of approaching lending, because when you want to borrow money,
Mm-hmm.
first you need to have figured out what it is that you want to do.
Mm.
So you know exactly how much will be required for what you want to do.
Yeah.
Then you have got a cash flow projection showing how you will pay.
Yes.
So the issue of security should come last.
Mm-hmm.
Unfortunately, in many instances here, it comes first.
Mm.
Yeah. So the moment you consolidate your debts, your payments now become regular. Now your credit score improves.
Mm-hmm.
As compared to when you had many debts, some of which you have defaulted, some of which are performing well.
Mm-hmm.
Sometimes you are alternating the default.
Mm-hmm.
You default on debt A,
Mm-hmm.
and then next month you don't pay debt B, you pay debt A,
Mm-hmm.
and then you keep rotating like that. So at one point, all your debts are coming to paid up, not paid up, paid up, not paid up.
Mm.
But when you consolidate,
Mm-hmm.
you have got one even repayment that you're able to plan for.
Yeah.
You can even set aside and say, I'm going to put in the bank 3 installments. So I know I will always be ahead of the loan by 3 installments.
Mm.
And my likelihood of defaulting now becomes very low. The idea of CRB, which actually stands for Credit Reference Bureau, it's a regulation within the banking sector for all the banks to share information of customers.
Mm-hmm.
So that when you want to take up a new loan,
Mm-hmm.
the new borrower is able to see how you have been performing. Okay.
Mm-hmm.
So when you have many debts which are defaulted, you are likely to have been listed as to be negatively listed in the CRB.
Mm-hmm.
But when you consolidate, you see you are paying off all the debts remaining with one.
Mm-hmm.
So if you had been listed for defaulting on many debts, then all that listing now is removed.
Mm-hmm.
So you become a good customer. Debt is a primary part of existence.
Yes.
It's like a necessary evil.
Mm.
So you have to live with it. All you have to do is now is manage it. And you first manage it by being conscious of it. Because what we are talking about here is consciousness. We are telling you, please take a piece of paper, write all your debts. So now you know, even as you're walking around, you know, I have debts worth this much. Not debts just swirling all over your head, but you have no idea how much you owe.
Mm-hmm.
And then from there now you can start looking for solutions similar to this. Long time ago, we used to have a career called computer operator. Because you would find in the bank only 2 or 3 people working the computer. We find it was called the machine. So there was a profession called computer operator. It's like having a calculator operator or something ridiculous like that. Okay. Over the years, everybody uses a computer. So using a computer is basic knowledge.
True.
Okay.
Yeah.
Now we are moving to another level now where not only are you using a computer, okay, you are utilizing it more. You are pursuing modern technology like artificial intelligence.
Yeah.
So when you are choosing knowledge, you must choose knowledge which is not only technical and relevant, but current. You know, if you look at the evolution of knowledge from Stone Age,
Yeah.
you can see how technologies have changed from stone tools all the way to artificial intelligence today.
Yeah. Yeah.
So you need to invest in the knowledge that is current, that is applicable today. You see, even in management consulting, we are always trying to find out for individual industries what is the most relevant knowledge that those people should have. So when we are training them, we are training them on the knowledge of the moment.
Mr. Njeru, we're almost done. This has been very informative. I am glad I asked you to come here. Now, I want you to give us key takeaways, something you think we have not discussed, something you had in mind that we have not touched on.
Take a piece of paper and take stock of your debts.
Yeah.
So you know how much you owe, how much your monthly obligation is, and when you're going to finish. Okay. If the amount you're paying is too much for you, take the step of reorganizing the debts now so that you are in a comfortable position to continue working without pressure. Yeah. Now, when it comes to looking for the debt consolidator, don't rush for the first person that offers to do it. Get a few offers from a few lenders. You might even find that even some of the lenders that have lent you money, they'll be quite happy to kick out everybody else from your from your loans by paying everybody and being the only lender. So don't be in a rush to accept the first offer. Walk around, negotiate, leverage by volume, because now you're giving one lender a large debt. Discuss the interest rate. Yeah, but most important, have the courage to face your debts head on.
Debt has been something that has been very personal to me. That's why I'm very interested in this topic.
No, it's not the only one.
The more you talk about it, the more I'm like, I'm taking notes. I should be writing this down,
Yeah.
This has been a very informative podcast. Where do people find you?
If you're interested in debt consolidation, a good place to start would be to visit our debt consolidation website, which is www.debtconsolidator.co.ke. You could also reach us for a free consultation on telephone 0729 044687. And then we can just start a conversation. When you go to that website, you'll be given a chance on the site to profile all your debts, make a list, tabulate them, all of them. The system calculates for you the installment and everything else. Then, when you are exposed there, because the site also has got the lenders who handle the debt consolidation, those lenders actually look at the profile of your debts, and they're able to select and say, come to us and say, can you give us a chance to consolidate a debt number 3? So now we are able to expose you to the lender, so that the process of consolidating your debts can begin.